Hello, and welcome to another episode of the Market Pulse series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So once you join in, kindly say hi on the live comment section, and these will confirm that everything is working just fine. So hello, Simon Joroge. Thank you. Thank you for joining this session. Kindly confirm that you can hear me as we prepare to start this. So just for your information, we have several sessions happening all week. We have the Market Pulse series happening every morning. And sorry, not Market Pulse, but the Market Snapshot series happens every morning at exactly 11 a.m., where we discuss the expected events for the day, the previous day, as well as doing technical analysis, trying to identify trading opportunities for the day, and of course, trying to process all that is happening around the financial markets. So hello, Ambrose. Hello, Martin. Thank you guys for confirming. Hi, Mary, as well as Joseph. So when it comes to the Market Snapshot series, it's every day from Monday to Friday at exactly 11 a.m. So on Tuesday, we have a special session called the Markets at a Glance, where we focus on the New York trading session, and this happens at exactly 4 p.m., just before the US market opens. So to cater for anyone who is not available for these sessions at 11 a.m., we also do this particular session, the Market Snapshot, and sorry, the Market Pulse, and it happens on Thursdays at exactly 8 p.m. So thank you guys. Thank you for joining the session. Let's get this started. So first things first, we'll be looking at quite a number of charts, and hopefully I will get to shed some light. The most important chart for the week has been the chart of the dollar index, which has been on a bullish rally for the last 8 weeks. So from around 17th of July, we've had 1, 2, 3, 4, 5, 6, 7, 8. So this is the 8th week that the dollar index is looking to complete bullish momentum. So if I was to zoom this on the weekly candlestick, you'll notice it's 8 straight green candlesticks, implying that there's currently a very strong dollar. So happening to see a very strong dollar going higher and higher on each and every day, then it basically enlightens a lot of trading patterns that you observed in other currency pairs. So for instance, if you look at pairs that are traded against the dollar, you'll notice, for instance, the pound USD has been on a bearish momentum for quite a period now. So 1, 2, 3, 4, 5, 6, 7, and this is the 8th week that we are seeing consistent bearish momentum happening in the pound USD pair. So if I was to remove all these analysis tools, some of these highlights, I keep on doing them and they get to accumulate over time. Then we can get a clear path on where the pound has been headed, and that is over the last 8 weeks. So clearly, it's a very strong one. So what we are seeing here is just a moment. I don't know what's happening with my highlight here. Just trying to fix it. It's obscuring my screen. Finally, I got it. So from this, you can see for pound USD, right from that area, you can see it's a bearish momentum. This market has been consistently forming lower highs over the last 8 weeks. And if you look at the lows and try to estimate, it seems like the market has been following a path somewhere along these lines. This trend line is not that perfect, but I'm trying to find a line of best fit. So clearly, you can see the swings down and up, down and up. And now we've had a very nice swing downwards for the entire week. And it seems like the market is bouncing off a major support level. So from this area, you can see that today, as the market kept going downwards, we have had some good area where there seems to be some support. So it was a nice area to make an exit if you are on the bearish momentum trade. So if you have been shorting the pound over the week, this seems like a nice exit area, since it represents an area where the market may make a pullback and go up until we get another bearish momentum. So on the short run, 15 minutes chart, and then we zoom out, you'll notice that for the week, we have also had a trend line, or basically a trend within a trend, and this has been following this particular path. So if you follow the highs, they've been getting lower and lower for the week. And also, if you look at the lows in this chart, you just connect this low and this low and this low. And then on the 4th day of the week, we are seeing consistent momentum following this path. So now, if I zoom in, you can see that the market is moving upwards, but the upward potential is not that much. So we may not expect the market to make a very big rally. So perhaps we'll be retesting today's high, which is around this area here. And potentially, if the market gets to this area, we could get to squeeze in another short selling position. So this remains a theory, and this is the basis of technical analysis, trying to identify potential market patterns. And once they play out, you're able to make a very strong high conviction entry. So for now, the market is pulling back towards the opening price and the high of the day. And if we get to this area, then it will be very interesting observing what happens here. So there's also this potential that the market breaks this area and keeps going higher, and that would also present a nice buying opportunity. So for now, if the market is going up and gets to this area, this will be our decision point, trying to identify whether there is further momentum upwards or whether there's a rejection and the market pulls back downwards. So think of it as observing the price as it was moving upwards here and got to this area here. So the big red candlestick here was indicative that this trend line was rejected, leading to a potential entry point for a short selling trade towards the lower trend line. So if you think about it that way, then you know that this is the area to observe once the pound gets to that area. So from the dollar index chart, you can see after the strong bullish momentum in the last 3 hours, the dollar has been unable to form higher highs. So after forming a high that is higher than the previous high yesterday, the market has pulled back downwards, not a very big move. It's still bullish to me. I would say this is pretty much bullish for the day. So we could be seeing potentially some higher price action happening for the dollar, and higher price action would also mean the pound gets back to the previous support area here. So it's an area to observe between the current price level and this area to look for short selling opportunities, and that would be determined by how the price reacts around that area. So the same case is true for the USDJPY, which has been pretty bullish, basically the dollar gaining against the Japanese yen. And then after today's high and yesterday's high, you can see the formation of a double top pattern, which basically implies some potential reversal or weakness in price. So the double top is where the market goes up, goes back downwards, up to the same level, goes back downwards to the neckline. And if the neckline is broken, then it's confirmation that the market is reversing. So if you don't have that confirmation, then the market may also go back to test the previous high. So with a strong dollar, if the dollar persists moving up, then there's that potential that the USDJPY would go back to retest this price level. But then if there's a clean break here, then it could be moving further back downwards to 146.7. And if there's further momentum, then we look at 146.263. So as for the EURUSD, it seems like a similar story. It's a market that has been consistently pushing for lower prices. If I try and adjust my price here, and then I set my trend line straight, then you can see that it's also trading on a pretty strong support level. So on the upper trend line, it seems like the market is extending this. And now from today's price action, it's very clear that the market has hit the bottom or the support level and could be on the verge of making a rally towards the upper trend line. So another key thing to observe is the bigger trend, and the bigger trend has been a bearish momentum after the EURUSD broke this major trend line. So it was on this channel for quite a period of time. The overall price action was moving this way. But then upon getting to the support level on the trend line, there was a strong bounce, and then the market eventually broke that trend line. So the breakout happened here, market pulled back and kept going down for the week. And now we are seeing potentially lower prices. So while on the short run, market is making a pullback towards the upper side, the overall idea is based on the trend, which seems to be bearish. So in this case, after a pullback, we should be looking for short selling positions. So if the Euro USD manages to rally to today's high or even yesterday's high, then that could be a nice area to observe for another short entry. So USD CAD has managed to break towards the upper side. So there's a good potential that we could be seeing some higher momentum with a strong dollar. So I remember mentioning this morning during the market snapshot series that we will be observing for the break. So the break has now happened towards the upper side, which implies that the direction of the next leg is likely to be upwards. So if there's a retest of this trend line, then looking for further bullish momentum might be a nice idea. So as for gold, a very strong bearish momentum, losing to the strong dollar. And now after pulling back and retesting the 1923 price level, you can see the sharp sell-off that happened later. And there's a nice potential that gold could continue pushing down lower to a level around 1910. And if there is a more momentum, it could drop further back downwards to around the 1903, 1900 price level. So for AUDUSD, sideways momentum, we don't have a break on either trend lines. So we stay off until we have a clear directional bias. For the US Tech 100, we know that there's been a big sell-off, especially in the top 7 or the Magnificent 7. So these are the top 7 stocks that have been driving the AI boom, as well as the US stock market higher. So with these companies now starting to take a step back, then there's a good chance we could be seeing some further downside in the Nasdaq. So it has been an overall bearish week. So even though there has been some form of pullback in the last couple of hours, I would say the last 2-3 hours, the market has attempted to go back up, but failed each time. You can see the long upper tails. Then it means that the original idea that the Nasdaq will continue further back downwards, the origin of this move, then a target is at $15,021 per share. So there's that likelihood. And of course, it's important we understand what's happening with the Magnificent 7. So one of them being Apple. So I think I have an article on the same. I don't know where I've stacked that one. Yes, it's right here. So Apple fell nearly 4% on Thursday and sparked a sell-off in tech stocks after reports that China has widened curbs on iPhone use by government staff in one of the US company's biggest markets. So Apple has the biggest market in China. Yesterday, the Chinese government basically announced that all government employees are banned from using iPhones at their workplace. So this led to a big sell-off in Apple shares, which were down 3.7%. So once the market opened early today, there was a further information coming from China that they're extending this ban to other government departments and agencies. And this led to another big sell-off in Apple phones. So we know that recently, Huawei, a Chinese-based smartphone manufacturer, was able to develop its own 7-nanometer microchip, which it is using in the latest smartphones. So now China wants the Chinese people to transition to this phone and move away from iPhone, which has always been a point of contention. Especially if it becomes very popular in the country, then there's that risk that the US could be mining data from Chinese citizens. So it works both ways. Huawei was also previously banned from selling its devices in the US because the US was afraid it would become a national issue, national security issue. So in that case, we're expecting a rise in Huawei in China and a drop in Chinese devices in China. So with these dynamics playing out and Apple, one of the biggest companies in the Nasdaq, starting to lose momentum, then the overall expectation is that the Nasdaq also starts to take a step back. So there's also another scandal boiling, and this is about a company that is closely linked with Nvidia. which has been the best performer in the Nasdaq as well as the S&P 500 this year. So we're about to discuss some financial innovation using computer chips as collateral for loans. So CoreWeave, which is the company we are talking about here, a cloud computing startup backed by Nvidia and Magnetar Capital, has secured a $2.3 billion debt facility using Nvidia's sought-after H100 GPUs as collateral. So H100 GPUs are the most in-demand microchips in the markets right now. They are majorly used in cloud data centers that are basically used to host the AI platforms. So the company tends to use that money to purchase more high-end chips, among other things. So listen to this closely. The company raised $2.3 billion, majorly from Nvidia as well as BlackRock. And now it's using this money to buy Nvidia stocks. And that sounds kind of like a manipulation of the sales that the Nvidia company is making, since the biggest percentage of Nvidia sales are basically going to this particular company called CoreWeave. So if your head hurts, let me try to sum this up. Nvidia invested in CoreWeave, which is reliant on Nvidia products, and now those Nvidia products are being used as collateral to buy. What is most likely more Nvidia products? Fantastic. All these are chips that are collateral, not the actual computers. Second, I'm generally interested in novel startup financial strategies, and this seems novel, all right. Third, I'm extremely curious about the risk management here. I repeatedly emailed CoreWeave for comment, but didn't receive a response. CoreWeave is a company that came from basically nowhere. This is the characterization of its co-founder, by the way, to build a data center in Texas and work extensively with Nvidia. Though the company was originally founded to mine Ethereum, it pivoted in 2019 to cloud infrastructure. Isn't that funny? Nvidia historically has been pretty hostile to its use of GPU for Ethereum mining, even going as far as to nerf some of its chips to discourage it. Nvidia has also paid the SEC $5.5 million to settle charges without admitting wrongdoing, that it unlawfully hid how much of its sales relied on the crypto mining market. And yet, there it is, deeply entangled with a company that buys out of chips and used to mine Ethereum. So CoreWeave absolutely nailed it, nailed the timing on its pivot from crypto. So as the AI hype wave began to crest, it caught the attention of clients and investors. There was a shortage of GPUs because of the crypto boom, and though that's busted at least temporarily, the AI boom has meant that who is getting how many H100s and when is top gossip of Silicon Valley, wrote Andre Karpathy, who is at OpenAI and was previously the director of AI at Tesla. So we all know the story of Nvidia. It has been selling a large number of these microchips to China as well as the rest of the world. So recently, there was this war currently happening between Russia and Ukraine, where sanctions were implemented, and now Nvidia cannot sell its chips to Russia. Later on, President Biden banned Nvidia from selling these high-end chips to China. So now Nvidia is not able to deliver these high-end chips to China, but somehow the demand for these H100 chips is still extremely high. But then when you investigate how much of these H100 chips is being sold and where they're ending up, you realize that a majority of these H100 chips is ending up with CoreWeave, which is a company that is closely affiliated with Nvidia. So the story is becoming a huge scandal. There's a lot of talk about it, especially on Twitter, X. So if this happens to be some form of manipulation of a fake H100 sales, then it might mean that Nvidia shares continue to crumble together with Apple, and this could lead to a big sell-off in the Nasdaq. So if you look at Nvidia stock and how it has performed yesterday, today, then today it's down 2.92%. Over the last 5 days, it's down 7.50%. And year-to-date performance is still significantly high. It's still up 219.19%. So the big sell-off that is happening just here, the small angle that you can see here, it's basically implying that this revelation could lead to some further sell-off, and the overall outcome or the overall analysis for us as traders is that we could be seeing some further downside momentum happening in the US Tech 100 index. So despite this strong momentum happening currently in the last 34 hours, there's still an opportunity that the index could continue going back downwards. So US 30 also bouncing strongly after a big sell-off yesterday, and today attempting to go down, didn't quite get to the support at 34,255. So it's now pulling back, and now we might be estimating 34,642 as the previous resistance. You can see how it played out here, here, and here. So if the market gets to this area, you might consider looking for another short. So same case applies to the S&P 500, a head and shoulder pattern. Market breaks, drops very nicely yesterday, pulls back, continues dropping, didn't quite get to our target support of 4,426. It's now pulling back, and now the area around 44.72 is an area of interest because sellers could be looking to re-enter the market around this area. So as for UK oil, we have seen a very strong momentum. The announcement by Russia and Saudi Arabia to cut oil output and extend it by the next 3 months led to a big spike in oil prices. But then if you look at the 15-minute chart, you'll notice that on Wednesday, the market pulled back downwards, went up, retested the high, and then down, forming this almost triangular pattern, broke the pattern early in midday today, pulled back, retested, and then continue putting back lower. So here, what we are seeing is a market that is basically adjusting the pattern. So from the previous area here, now we are seeing a market forming this, but still it's a higher low, higher than the previous low, higher than this other low, while the highs remain the same, which basically implies that oil is consolidating somewhere between $89 and $90. So this could be a nice bounce, and the market could be headed back up to above $90. So French equity index started with a big rally in the morning during the London session before weakening, and now it's trading around this area here. And there's still more room for some further downside, especially considering we didn't quite get to the expected support, which was around 7,104. So if you look at Euro 50 stock market index, so a very strong rally the last 2 weeks. This week strongly bearish, and then today early in the morning we had a big rally, got to this resistance around 42.49 before selling back lower to 42.15. So expect some further downside momentum as we approach the end of the week. And of course, if you look at the UK 100, it was the most bullish of the European equities. Found resistance at yesterday's high, attempted to break and failed, and now it's retesting again. So if this level fails, we could be seeing some further downside momentum, perhaps towards today's low or even yesterday's low. But now it's a wait and see kind of movement. So as we turn our eyes to the economic calendar, there's quite a number of things happening. So first things first, we saw that the crude oil inventories came in way weaker than expected. So in the previous reading, they were down 10.6 million barrels, and now they were down negative 6.3 million barrels, way bigger than the expectation, which is supposed to be extremely bullish for oil. So looking at this, and let's remove the noise in the forecast, then you can see that for the last 4 readings, it has consistently been moving down. That is the last 4 weeks. So crude oil inventories go down the first time, second time, third, and fourth time, basically implying that the US SPR reserves are weakening, and with lower oil supply, we should be expecting some higher prices, especially considering that the demand could be stabilizing somehow. So in this case, it's extremely bullish for oil market traders. So we could be seeing a strong bounce at the current level. So as we approach the end of the day today, we will be expecting a number of speeches from the FOMC. There's a member Goolsbee speaking at 6:45 p.m. This already happened. Now we are looking at FOMC member Williams as well as FOMC member Bauman. So for Canada at 8:55 p.m., we'll be having a speech from Bank of Canada Governor Mark Lem, especially concerning the interest rate decision that they made yesterday, where they chose to basically hold interest rates level at the current 5.0%. So the CAD cash rate was maintained at 5.0%. We didn't have a press conference, so the most expected explanation of the monetary policy will be today when the Bank of Canada Governor Mark Lem speaks. So if you click on the details here, you'll notice the text of the speech is due at the release time. Instead, the speech is scheduled for delivery 15 minutes later. So in this case, we will not be expecting to listen to the speech because the text will be released at exactly 8:55 p.m. So investors will be following closely to see the release of the speech, read it, and try to understand what the governor is saying, and then that could potentially move the Canadian dollar pairs. So that's the biggest event happening this evening. So as we head on to tomorrow, we'll be looking at quite a number of data points, a majority of which will be coming from Japan. So we'll be looking at the average cash earnings. This is the rate of wage growth in Japan. So previously it was 2.3%. We're expecting this to rise to 2.4%. We'll also be looking at bank lending year over year, the current account, which is the difference between exports and imports, final GDP price index, final GDP quarter over quarter, economy watchers sentiment survey, and all these will be happening between this is 2:30 a.m., 2:50 a.m., and then 8 a.m. Then as we approach the London session, we'll be looking at the German final CPI or consumer price index, which is basically a measure of inflation in Germany. French industrial production, EU economic forecasts, that will be tentative around midday. And then we look at the Canadian employment change as well as the unemployment rate. So it looks like Canada's week. So we'll be following closely to see how the volatility turns out in Canadian dollar pairs. Capacity utilization rate before we look at our speech from FOMC member Barr. Then final wholesale inventories, consumer credit for the US, before we look at data on Saturday. So it's a unique week where we get Chinese data coming in on Saturday. So this will be the CPI or measure of inflation in China, as well as our producer price index. So with these two data points coming up this Saturday, basically means that if you have an asset that may be affected by a change, a big jump in a Chinese CPI, then you might consider setting the appropriate risk management tools, especially if you have open trades for the weekend. But then if you don't want to take that risk, then it might be within your interest to close your trades on Friday to avoid the big gaps that might be experienced once the market opens on Monday. So as for next week, we'll be looking at a brief highlight of what we'll be expecting. So from Monday, largely a quiet day, nothing much. Tuesday, UK jobs data. Wednesday, UK GDP. So it seems like a UK week. Then we'll be looking at the inflation data for the US, core CPI and CPI, as well as CPI year over year. That will be a very important data point for the US. Australian employment change, as well as the unemployment rate. The ECB main refinancing rate. Interest rate decision for the ECB will be happening on Thursday, and this will be at 3:15 p.m., as well as the monetary policy statement before we look at the ECB press conference at 3:45 p.m. That's 30 minutes later. So we'll also be looking at retail sales in the US, core retail sales, producer price index, core producer price index, as well as the unemployment claims in the US. Then Chinese industrial production, retail sales, fixed asset investment, NBS press conference and the unemployment rate on Friday. Before we look at Empire State Manufacturing Index and preliminary University of Michigan consumer sentiment and inflation expectation survey at 5 p.m. So it seems like next week will be a pretty big week with a lot of announcements happening in the market, and that will present some good opportunities for traders. So let me check to see if there's any questions or comments. Here we have no questions or comments. Hello, Onduso, John Oero, Grace Kiama, Kensi Manene, as well as Jodo. Thank you guys. Thank you for joining the session. I hope today you learned something and you will be able to identify trading opportunities once they present themselves And of course, now you have an update on what's happening with Nvidia and CoreWeave, as well as an update on what's currently happening with oil markets, as after the Saudi Arabia and Russia decided to cut oil output. And of course, we have seen weakening US crude oil inventories, which is bullish for oil. And now we have also seen what's currently happening with Apple. So thank you guys. Thank you for your time. And I hope to see you on the next session.